What is a life settlement? When should you consider selling your life insurance policy? Well, generally speaking, I would say hardly ever, but it does happen. So get ready. In this episode, I'm going to define what a life settlement is and why, if you no longer need, want, or can afford your life insurance policy, why you may want to consider selling it on what is called the life settlement secondary market rather than surrendering your policy, which would be like selling it back to the issuing insurance company. So get ready. I think you're going to gain insights into some opportunities here. So I'm Doug Andrew. I've been a financial strategist and retirement planning specialist now for north of 5 decades, helping thousands of Americans optimize their assets, minimize taxes, and empower their authentic wealth. Now, most of my clients, they use life insurance for life, okay, rather than death. Most people, most financial advisors sell life insurance to pay off, to be used if you happen to die. Now, our clients, they use the tax-favored benefits of life insurance for living benefits to be able to become self-insured and max fund life insurance so that you can earn an internal rate of return after all costs and fees, perhaps of 10%. And you're earning 10% tax-free rates of return. Every $1 million you accumulate in cash value can generate $100,000 a year of tax-free income for the rest of your life without depleting principal. Now, that's what most people come to us wanting to do, is using life insurance for living benefits, not so much the death benefit. Now, once in a while, things happen. Life happens. And we lose a job, we get disabled, something happens that wipes us out. Maybe your children come and ask to borrow money and then they can't pay it back, whatever. I've heard all kinds of stories. And people have life insurance policies occasionally, thank goodness it's less than 3%, that they no longer want or need, okay? And so sometimes they just say, let me just stop paying the premium payments and I'll just let it lapse. I'll let it go. I'll just surrender it for the cash value. That would be like selling your life insurance back to the issuing insurance company. They're willing to give you the cash surrender value. Well, sometimes your policy is worth more than that, and most people don't understand this concept, okay? So let me go through a few key points here, and I'm borrowing from some literature that I got permission to use from Coventry. That's one of the big life settlement companies that I use in order to shop or have policies appraised in the unlikely event a client no longer wants or needs their life insurance policy. So why would you sell your life insurance policy? Let's answer that first. There's many reasons, okay? Some of the common ones are the original purpose of that life insurance policy no longer exists. If it was a buy-sell agreement for the business, and maybe you sold your business, or maybe the beneficiaries you named have now predeceased you, or you no longer need it to pay death and estate taxes, whatever, okay? Maybe for estate, business, or financial needs, they've changed. That can happen. Or liquidity is needed. In other words, you need money. You need liquid cash, and so you need it bad enough that you could let go of your life insurance and get cash in exchange for selling your life insurance policy, okay, on the life settlement market, or back to the issuing insurance company by surrendering it. Or maybe the premium payments have become unaffordable, okay? You just can't afford the premium payments anymore because now you're shelling out a bunch of money for medical costs or what have you. So those are some of the common reasons why someone might sell their life insurance policy. Now, who qualifies? Generally speaking, insureds that are 65 years or older living in the United States. Younger insureds, they usually have to have health impairments where they have been diagnosed with a terminal illness like cancer, or all of a sudden they're in serious, they've got diabetes or something that causes their life expectancy to be short, okay? So that's who qualifies. Any policy type, it could be whole life, it could be universal life, it could be term insurance, as long as it's convertible to permanent life insurance, okay? And there's no minimum or maximum life expectancy. But see, that's how they're going to appraise your policy to offer you cash in exchange for becoming the owner and beneficiary of your life insurance policy when you ultimately die. They want to know how long you're likely going to live based on life expectancy mortality tables. That's why they have you sign a release to get your medical records and information so that they can calculate your LE. Now, you can live longer or die sooner, but they want to sort of see what the average is when you will likely pass away based on national averages, okay? So that's who qualifies. Let's go to how you can use the money. You can use the money however you see fit. You can take the money from selling your life insurance policy and put it in investments and financial planning, but I always say, well, wait a minute. Was the money inside that life insurance, or if you continue to pay premiums, that's a pretty doggone good tax-free investment. So think twice before you sell it. Who is going to buy it? Somebody who realizes that they're going to get a great rate of return. So don't just jump into selling your policy because you can't or don't want to pay the premium payments anymore. You should have it analyzed. Really critical there, okay? You can use it to cover medical or long-term care needs. If you're running up a bunch of hospital bills, you don't know where to get the money. You could fund a better retirement, but actually a max-funded index universal life insurance policy is the superior retirement if you have the wherewithal to fund it. If not, you could use it towards those goals. You can generate liquidity, money, for large purchases of maybe traveling, okay? Maybe you've been diagnosed with a terminal illness and you want to sort of create some memories on a bucket list, and you need the money to do that because you're no longer concerned about maximizing what you leave behind when you die. You just as soon use the money while you're alive. So you sell your life insurance policy for somewhere between the cash value and the death benefit instead of just leaving behind a death benefit, especially if you don't care about the heirs you're leaving it to. You can provide immediate financial support for family. If somebody in your family or your spouse really needs some help, and this is the only resource, maybe it's worth the trade-off to give them support now rather than waiting until you pass away to get a lump sum of tax-free money, okay? So lots of reasons. Now, let me go into why and some of the advantages and disadvantages of life settlements. So I'm going to go back and put this on the screen. This is where you're selling your life insurance policy instead of letting it lapse or surrendering it back to the insurance company for that what is called the cash surrender value. Because if all you do is say, I'm going to surrender this policy, you're in essence selling the policy back to the issuing company. Well, many times you can get more than that. That's why it may behoove you to have your policy appraised on the life settlement market. There are institutional investors and private investors that are interested in investing in buying other people's life insurance that they no longer want or need. Why would they do that? We'll do the math. If they buy your life insurance policy, they're going to calculate your LE, your life expectancy, through a professional company, maybe like Coventry. And if your life expectancy is 7 years, then they do the math and they go, well, if I bought this policy and I gave this person $1 million for this $3 million policy, that's the death benefit, $3 million. I'm going to give them $1 million because if they just surrender it, they're only going to get $100,000 if they've been minimum funding it. I'm actually explaining a true story. I had a client who things changed, and so instead of maximum funding, they minimum funded their policy, and it got to the point where the premiums were about $100,000 a year for a policy that was in excess of $3 million death benefit. But you know, their life expectancy is going to be less than 10 years, but they didn't want to keep shelling out $100,000 into it. If they surrendered it, they would only have about $100,000 of cash value. And I said, hold on, let's shop this thing. And sure enough, savvy investors said, we'll give you $1 million and then we'll take over and pay the $100,000 a year in premiums, because if you lived 7 more years, that's 700,000 plus the million. They put in 1,700,000, but when you die, likely in 7 years or even 10 years later, they're going to get 3 million plus tax-free. Calculate the rate of return on that. That's why before this client sold the policy, I said, I want to make absolutely sure you understand the math, Because the only reason why somebody's going to buy your policy is because it's a great rate of return when you ultimately die. And if you cannot take advantage of that, if you'd rather have a bird in the hand by having $1 million today rather than wait and get $3 million to leave behind to your heirs, great, let's sell it. But that's why people are willing to do it. Now, many times when somebody no longer wants or needs their life insurance, I will contact their family members first and I'll say, hey, we're going to shop this on the life settlement market. But if any of you children want to buy your parents' life insurance policy, let me show you how to do the math on how you can take over this policy and you can pay them the money that somebody else would pay. And then you will take over the premiums, but the rate of return is going to be incredible, tax-free, which would be far better than you putting money in an IRA or 401k based upon the life expectancy. And so I've had many family members who ended up taking over the premium payments on life insurance that their folks were going to let go or let it lapse or sell. They bought it, and then it was a great rate of return for them. Basically, I've owned life insurance on my father, my father-in-law, mother-in-law. I couldn't on my mother. She had some heart issues before I could do that. But I did the math, okay? But see, if nobody is interested, then you can sell it on the life settlement market. Now, why do we have this market? Because there's about $700 billion of life insurance death benefit every year that's just surrendered, okay? It just lapses, okay? About 100 billion of that are seniors. And so many times they just let their policy lapse or they just get the surrender value and they could get more than that. And they didn't even know. And so it would behoove you to shop it on what is called the life settlement market. You should have your policy appraised. So many of my older clients, I will have their insurance policies appraised every couple of years based upon their LE, life expectancy. Because the chances are it's not going to turn into a death benefit if they can't afford to keep paying the premiums, okay? They might be able to finance or borrow or whatever, but it comes out as a win-win. Whoever buys their life insurance, it's a win for them. It's a win for the client because they get more than the cash surrender value, which is just selling it back to the issuing company. And so everybody wins by doing that. And so again, I think of a particular client. I've had, a handful of clients sell their life insurance policies, and they got a lump sum today, a bird in the hand, so to speak, today, where this one client got about $1 million cash today instead of waiting until he died and then his heirs get $3.5 million when he dies. He wanted to have the $1 million today to enjoy and use because his heirs didn't need the money anymore. If he would have let the policy just lapse or be surrendered, he would have only gotten $100,000. I got it nearly 10 times that by selling it on the life settlement market. So if you're interested and you want to have your policy appraised, then you can reach out in the comments section of this video on my YouTube channel, and I'll try to get back to you to help you understand if you have a policy that is sellable, but you have to meet the criteria that I've explained in this video, okay? If you don't meet that criteria, I will not get back to you because I only have limited time. But you may want to consider understanding this. If you or somebody you know has life insurance they no longer want, need, or can afford, and rather than just selling it back to the company by surrendering it, you ought to have it appraised and see if you can sell it for more than that to have a greater amount of cash now than you would get by just letting the policy go, okay? Now, if you want to learn more about any of these concepts, I would recommend that you claim a free copy of my book, The Laser Fund. This is my most recent best-selling book. It's been flying off of our warehouse shelves. It's actually 2 books in one. This side, the white covered side, is for the left brain learner. It has all the charts and graphs and explanations. If you're more of a right brain learner, you learn more by stories. You flip it over to this book. And this has 12 chapters with 62 actual client stories of how to optimize assets and minimize taxes using what I call a laser fund. Okay. Now, if you want a copy of this book, you can buy it on Amazon for $20 up to $60 plus shipping. If you do that, thank you, but I'll gift you a copy for free. You simply go to laserfund.com or click on the link below, and you contribute a nominal amount towards the shipping and handling. I'll cover the rest of that cost, okay? I require a little skin in the game. And then I'll pay for the book. I'll fire out a hard copy to you via priority mail. And when you're in there claiming your free copy of this book, if you'd like to listen and learn or watch and learn, there's those formats available for your investment. You can even schedule an appointment to talk to one of the top IUL specialists in America that I oversee, I mentor, and for no cost, no obligation, they'll show you an asset optimization plan without increasing your outlay one dime, and how much better off you will be 5, 10, 15, 50 years down the road without increasing your outlay one dime by repositioning underperforming and non-performing assets, and maybe it's even life insurance that you own that's underperforming. And you may want to convert it, you may want to sell it, but that's what I do. I help people optimize assets and minimize taxes. And this is not about me. This is about you and your brighter future.